Hello students, welcome. This is Dr. Mercado speaking. Now this lecture I am recording it because I've had a lot of students have issues or difficulties posting to the general ledgers, okay? This entails the information being covered in Chapter 4, which deals with journalizing and posting transactions. Now, I've communicated with several students, either through Blackboard message, through email, through Pronto, and they're having issues posting to the general ledgers. I've reviewed some of the students' works, and I've found some inconsistencies as to what is it that they're doing. I do want to encourage all students to please make sure that you do read the chapter in full before you begin attempting your homework problems, okay? You're not going to understand if you do not read, okay? The textbook has very critical information as well as examples that will help you get through this. Now, I know it can be challenging, okay? I am going to go through an example, and this example is more focused on transferring the information from your journals to your ledgers, okay? So let's go over the process. The first thing that you should be doing is completing your journal, okay? You need to complete all of your journal before you start transferring information over to your ledgers. You don't do it at the same time, okay? You don't try to do your journal and the ledger at the same time. No, you don't. First, you have to record all of your transactions in your journal. Something very important. Debits must always equal your credits, okay? They always have to equal, okay? Your journal has to be correct. That way, when you transfer the information to your ledgers are correct. I do give you some check my works in Cengage. That way you can check your work as you're doing it. I encourage students not to use up your check your works not until you've completed all of your journals. That way you can figure out what you've done right, what you've done wrong, and then make some corrections, okay? I am not going to go over doing a journal, okay? Doing a journal is very simple. You enter the debit on top, the credit on the bottom. Debits equal credits. You have to analyze each of the transactions and record the corresponding transaction, okay? That everybody should be familiar with by now, okay? So I'm not going to go through that process. What I am going to go is transferring the information from your journal to your ledgers, okay? So I've got a short example here for time constraint purposes, but the logistics of it is the same. So once you have it down, you should have no issues transferring the information over, okay? So assume that this is your journal. This is all you have. Now you're going to transfer this information into the specific general ledgers, okay? So how are we going to do that? Well, we have one general ledger for each account. Each general ledger has the account name. In this case, we have cash and the account number, which is your number designated for each account. These numbers should be recorded in your journal, okay? A lot of students are missing entering the post-reference information in your journal and in your ledger, okay? When you post your post-reference information on your journal, you're going to enter the account number referenced on the ledger. On your general ledger, you're going to enter the journal page number where you got the information from. And you'll see that in a bit, okay? So, once you are done recording all of your transactions in your journal, then you can begin transferring it over to your ledgers, okay? So, we're going to go in sequential order. Now, what I like to do is I'm a visual person, okay? I highlight what I've used, okay? Now, in this case, your general ledger cash had a beginning balance of $38.26. Now, my balance is on the debit side of the equation because cash is an asset account, okay? So cash is an asset account. The normal balance of cash will always be a debit. So it's very important that you put the information in the correct columns, okay? So now what I'm going to do, this is my beginning balance. I'm going to begin transferring the information from my journal to my ledger. So I'm going to go to my journal and I'm going to locate all of the transactions that have the account cash involved. And I'm going to post that over here to your general ledger, okay? So I'm going to go ahead and I'm going to locate it. The first one I have is right here, okay? And I'm going to go ahead and I'm going to highlight them, okay? That way I make sure that I've used all of my accounts, okay? So I'm going to start off. This transaction happened on June the 1st. Okay, So make sure that you just copy the information just like you have it on your journal. Okay, you're just copying and pasting. Okay. On the item, you leave it blank. You don't have to enter anything unless it's a balance or an adjusting entry. Okay. For your post reference, you're gonna enter J7. J stands for journal, and 7 is the page number. Okay, so you're always gonna enter the page number. That way, if I need to go back and look at this transaction, I know I need to go to journal 7. Okay. Now, in this case, cash has a credit. Okay, we're crediting cash. So when we credit cash, what does that mean? That means that we paid cash to someone. Okay, so I have a credit. Okay. Okay. So because this is a asset account, my normal balance is a debit. A debit increases and a credit decreases. Okay. And I'm just entering that here. That way we know what we're doing. Okay. So because it is an asset account, the normal balance of an asset account is a debit. A debit will increase it. A credit will decrease my account. So you're always going to start off with your beginning balance. My beginning balance is $38.26. I've got a credit, so that means I'm going to subtract $300. So that means I've got $3,526 left over in cash. Okay, I'm going to put that balance as my ending balance, and it's still going to go on my debit column. Okay, and it's going to go on my debit column because I still have money available. A debit balance tells me I still have money in my bank account. Okay, so that's $35.26. Okay, I'm going to go down the list and I'm going to find another transaction. I have another transaction on June the 2nd. Okay, and that's also journal 7. This time my transaction is a debit for $100. Okay, so I'm going to get my ending balance of $35.26. This is a debit, so I'm going to add my debit plus 100. That's going to be $36.26. Okay, that's going to be my ending balance. Okay, so all I'm doing is I'm maintaining the ending balance for my account cash. Okay, so that happened on June the 2nd. Then on June the 4th, I have another transaction. So I'm going to enter June the 4th. Okay, journal 7. And I've got a credit for $15. So that means that I must have paid something dealing with advertising. Okay, because it is a credit, I am going to subtract $15. And that's going to give me $36.11. Okay, so that happened on the 4th. On the 6th, nothing happened with cash. Now on the 7th, I've got June the 7th. I've got journal 7. And I've got a debit of $260. Okay. Make sure that you enter it on the correct column. It's a debit, so I'm going to enter it over here on the debit. Okay. Because it is a debit, I'm going to add. So I have my balance of $36.11 plus $260. That's going to give me $38.71. Okay. So all I'm doing is I'm bringing in my accounts only that affected the account cash. Okay. So on June the 9th, I've got journal 7. I've got a credit of $200. So I spent $200. Okay. So I'm going to go ahead and I'm going to get my ending balance of $38.71 minus $200. That's going to be $36.71. And then on June the 10th, I've got another transaction, another credit of $100. Okay, so this is happening on June the 10th, journal 7, and I've got a credit of $100. Okay, because it is a credit and this is an asset account, I'm going to subtract. So it'll be $36.71 minus 100. That'll be $35.71. Okay. So those are all of my transactions that affected cash. Okay. So what does this tell me? Well, this tells me that I started off with a balance in my cash account of $3,826. I had some transactions during the month and my ending balance was $35.71. And I recorded all of my transactions. Cash is an asset account. Okay, this is an asset. Okay. The normal balance of an asset is a debit. So a debit will increase, a credit will decrease. Okay. So we're done with cash. Okay. Accounts receivable is also an asset account. Okay. So therefore, because it's an asset, my debit is going to increase and my credit is going to decrease. Okay. So accounts receivable has a balance of 1,212. It's an asset. You will always find the balance on the debit side. Okay. So let's go look for account number 122. So we're going to go through the list and we're going to find 122. And I found it right there. Okay, so I'm going to copy that transaction that happened on June the 2nd. Okay, and this is journal 7. And I have a debit of $200. Okay, so my accounts receivable got debited $200. Because it's a debit, I am going to add it. Okay, so I'm going to go ahead and I'm going to get my balance of 1212 plus 200. That's going to be 1412. Okay. And we're going to go down the list and see if we have anything else that has the account 122. And we don't. That is it. So now that will be my ending balance. Okay. We only had one transaction. I've already transferred it over. Okay. Now we're going to look at office supplies. Office supplies is also an asset account. That's anything that we own. It's account number 142. So we're going to look for 142 down the list. And here we go. We've got it. I'm going to go ahead and I'm going to highlight it. So I've got a transaction for $180. So office supplies had a balance of $648. Now here on June the 6th, I have another transaction posted to Journal 7. And I've got a debit of $180. Okay. Because it is an asset account, the debit increases, a credit decreases. So we're going to go ahead and we're going to get our ending balance, which is $648. And I'm going to add the $180. And that's going to give me $828. Okay. So what am I doing? I'm getting my beginning balance, which is a $648, and I'm adding, because this is an asset, a debit increases my account. So I'm going to add $180, and that's going to give me my ending balance of $828. Okay, so that's $142, and that's the only transaction that we have. Okay. Okay, let me just shift these up a little bit. That way we get to see. Okay. So now we are going to jump over to office equipment. Okay, office equipment is account 181. So we're going to go down the list and we're going to find 181. Oh God, I deleted some of these. I shouldn't have. There we go. Okay. So what happened? I deleted some information. There we go. Okay. So here we go. Now we have office equipment account 181, and we have only one transaction with 181, which is this one right here. We're going to go ahead and we're going to highlight it. So office equipment, we've got a debit of $700. Okay, so office equipment had a beginning balance of $2,100. On June the 10th, we bought more office equipment. This is on Journal 7. So I've got a debit of $700. Okay. Because it is an asset account, a debit increases, a credit decreases. Okay, so we're going to get the $2,100 plus the $700. That's going to be $2,800. Okay, so I've got more equipment. I used to have $2,100. I bought $700 more. It's a debit. So now I have $2,800 worth of equipment in my business. Okay, so that's the only transaction that we have. Now we go to accounts payable. Okay, office equipment is also an asset. Okay, now we go to accounts payable. Accounts payable is a liability. Okay, this is money that we owe. Okay, the normal balance of a liability is a credit. Okay, look at that right there. The normal balance of a liability is a credit. Okay, so in this particular account, your balance will always be on the credit side, your ending balance, okay? So we had an ending balance of $600, so that means that we owe $600. Now we're going to go and we're going to locate account number 202, okay? So we're going to go down the list, and here I have a transaction for accounts payable. And let me get more colors. Let me get a pink, okay? So I've got accounts payable, a credit of $180, okay? accounts payable, and this is happening on June the 6th, okay? June the 6th, this is journal 7, and I have a credit of 180. Okay, so make sure that you enter it on the credit column, okay? Now, because this has a credit balance, we're going to go ahead. Anytime we have a credit, we're going to add. Anytime we have a debit, we're going to subtract, okay? So this is the opposite. Why? Because this is a liability account, okay? So when we're dealing with liabilities, a credit will increase it, a debit will decrease it, okay? So I'm going to go ahead and I'm going to get my ending balance of $600, and I'm going to add, because it's a credit, I'm going to add 180. So that's going to give me a balance of 780. Okay, so my ending balance is 780. So what does that mean? That means that I used to owe $600, but then I bought some stuff on account of 180. Now I owe 780. The balance that you owe is increasing, okay? So that happened on June the 6th. Let's go look for some more. Here we have another transaction. On June the 9th, we have a debit of $200. Okay, so we must have made a payment. Okay, so June the 9th, this is journal 7, and we have a debit of $200. Okay, now because this is a debit, I'm going to go ahead and I'm going to get my ending balance of 780, and I'm going to subtract. Look at this. If it's a debit, you subtract, because you're making a payment. So that means that my ending balance is 580. Okay, it will still be in the credit column because we still owe $580. Okay, the only thing here is when we process the transaction, we must enter it where it happened, which was a debit, and that affects our account balance by subtracting. Okay, so that is account number 202, and here we have another transaction for accounts payable. That is happening on June the 10th, okay? And then journal 7. And we have accounts payable. We've got a credit of $600, okay? Credit of $600. So we bought some more stuff on account. So I'm going to go ahead and I'm going to get my ending balance, which is 580, and I'm going to add $600. So that's going to give me an ending balance of 1180. Okay. Credit. So what does that tell me? Okay. That tells me that I owe more money. Okay. I used to owe $600. Now I owe 1180. So I bought some stuff on account. Okay. That's what it's telling me. Okay. So my accounts payable balance had a credit balance of $600. Okay. And then I went ahead and we had transactions happening. So we added 600 plus 180, and that gave us 780. 6 plus 180 is 780. Then we subtracted 200. That gave us 580. And then we added 600. That gave us 1180. Okay. So just be careful when you're dealing. You need to know the normal balances of each account. Accounts payable is a liability. We owe money. Okay. So therefore, when you are increasing it, you're going to go ahead and credit it. When you are decreasing it, you're going to debit it. Okay. Now, delivery fees. That is a revenue account. Okay. Okay. For delivery fees, we had a balance of 9880. Okay. Delivery fees. Okay. This is where we generate income. So we're going to go ahead and we're going to look for account number 401. Okay. So we have one transaction. Now, delivery fees, revenue account. Okay. The normal balance is a credit. Okay. For delivery fees. Okay. Because the normal balance is a credit will increase it. Sorry about that. A credit will increase it and a debit will decrease it. Okay. So anytime that you have a credit, you're going to add. Anytime that you have a debit, you're going to subtract when you're dealing with revenue accounts, okay? So I had a credit balance of $98.80, okay? So we're going to go to delivery fees, and we have a credit of $300 on June the 2nd, okay? So June the 2nd, we have journal 7, and we have, how much was it? Delivery fees of $300 credit, okay? So we had a balance of $98.80, and I'm going to go ahead and I'm going to add, because it's a credit, I'm going to add $300. So that's going to give me a balance of $10,180 credit. Okay. So that's 401. Here I have another transaction to account 401. I've got another credit of $260. This is happening on June the 7th. Okay. So June the 7th, journal 7. And how much was the credit? $260. Okay. Credit of $260. So I'm going to go ahead and I'm going to get my ending balance, which is the $10,180 plus the $260. And I'm adding because it's a credit. Okay. And that's going to be $10,440. And those are all of the accounts that I have for delivery fees, okay? Now we're going to move on to advertising expense. This is an expense account. Oh, sorry about that. Advertising expense is an expense account, okay? Now the normal balance of an expense account is a debit, okay? You will always see your expenses on the debit column information. A debit increases it, a credit decreases it, okay? So when you're dealing with expense accounts, whenever you see a debit, you add. When you have a credit, you subtract. I have a beginning balance of $90, okay? Now let's go look for account number 512, advertising expense, okay? 512, I have advertising expense right there. And let's get another color. Okay. So I've got advertising expense, debit of $15 on June the 4th. Okay. So June the 4th, this is journal 7. And we had a debit of 15 bucks. Okay. So my ending balance is going to be $90 debit plus $15 debit. That's going to be $105. Okay. So my ending balance for advertising expense is $105. Okay. So that is the only transaction that we had for 512. Okay. Last but not least, we've got rent expense. We had a balance of $900 debit. Okay. Rent expense is an expense account. Okay. So rent expense had a balance of $900. Let's go to our journal and let's see what we find. Well, on June the 1st, we find that we're paying the rent for $300. Okay. So I've got rent expense, $300. Okay. This is happening June the 1st. Okay. June the 1st, we've got journal 7. Sorry about that. Journal 7. And we have a rent expense of a debit of $300. Okay. So we used to have a balance of $900 plus $300 new. That's $1,200. Okay. Remember, expense accounts, when you get a debit, you add. When you have a credit, you subtract. Okay. So now at the end of the day, I have transferred over all of my accounts from the journal to each of the respective ledgers, and I have calculated the ending balance for each account. Okay. That is how much I have on each of those accounts. That's how much money I have in the bank, how much money I've spent on the different expense accounts, how much revenue I've generated. It keeps track of your ending balances. Okay. Remember, the key is to have correct journal entries. If your journal entries are incorrect, then your general ledgers will also be incorrect. So it is super important that your journals are recorded appropriately. Once you are done entering all of your journals, then you can begin transferring the information over to the respective general ledgers, okay? And you're just going to copy as is the transactions, okay? Copy over and then calculate the ending balance depending if you have to add or subtract, okay? But that is the process of transferring information from your journal to your ledger. It's not difficult. Make sure that you enter that post-reference information, which is the journal page number on the ledger and the account number on the journal, okay? So I hope that this provides a little bit of clarity on how to transfer information over. Please, if you have any questions, don't hesitate to reach out to me, okay? Please make sure that you read the chapter, that you review the PowerPoints, and that you listen to my other lectures that I have posted on Blackboard as well, okay? So that is basically it for this short lecture. Until next time, and I hope you have a wonderful rest of your week. Thank you. Bye-bye.